We need to get into an update on AMC stock as well as the markets because you had CPI data that came out today, which was very negative, especially on core CPI. Headline CPI did drop a little bit more than expectations, but this report really shows that inflation is going to be stickier and the Fed's not going to be able to U-turn anytime soon. So we'll talk about that, go over the numbers, and you do have more important economic data, which is the FOMC minutes that comes out here at 2 p.m. today, which will also cause a big market reaction. But before we get into any of that, I want to highlight this comment from Big Ads 3617. He says, LOL, are you deluded? 1. Intera Capital is not getting smoked. 2. The judge is following the legal process. Deal is done. 3. Maybe get correct information before releasing it. And obviously, I mean, I'm sure this individual wants this reverse split to go through, wants to see 80, 85, 90, 95% dilution. And again, I'm agnostic, I don't care, but let's get something very clear here. Number 1, Intera Capital. They got a really good deal on their ape shares. Yeah, I will give it that. But they're also short on AMC. They've also been buying puts that have gotten completely smoked. If you watch the last video that is literally titled Intera Capital is getting smoked, we go over the trades that they have. They're down 85 to 95% across the board with no exceptions. So they're getting smoked on that front at the very least. They're probably still up on their ape shares by a little bit. But is that going to matter coming April 27th? I don't think so. Now, number 2, the judge is following the legal process. Deal is done. That is the farthest thing from the truth. Unfortunately, the deal is not done. And it's probably not even close to being done. Because what was the original argument and lawsuit in court? That Intera Capital, AMC, a couple different entities basically rigged the vote, right? AMC did a deal to start this trade and gave Ape the same voting power as AMC common stock, and then make a vote and say that everyone wanted this to happen. There's a very good argument there that literally a dude on YouTube could make that would say that was not a fair vote. Now, why do you think the judge did not lift the status quo order? Because typically, if you come to an agreement in this way, a judge would lift the status quo order. AMC asked for it for a reason. They thought it would be lifted. So this is far from done and likely far from over, because the judge is still going to go back on the original point here of, was this a fair vote? And number 2, is this settlement agreed upon in mass by shareholders? And both of those are unclear. But the markets are pricing in right now that coming April 27th, AMC is going to fall like a rock. I'm not in that camp. I will not support that thesis until there's more credible evidence or a pathway to see that happen. That's not a thing. So I did want to point that out. And this is maybe get correct information before releasing it. Seems pretty correct to me. Seems like a pretty low intelligent kind of argument that I'm making, right? It doesn't have to be too complicated here. It's really like minimal brain effort to sit there and say, was this vote fair? Number 1, obviously not. Is a judge going to see that? They should, because this is what they do. They're a chancery court. And then, is the settlement fair and agreed upon by all common stock investors? Well, that's uncertain. It doesn't take too much to see that. So, long story short, you guys gotta be careful on kind of where your mindsets are, because you gotta take in the information on all different sides here. And if you do, and you do take in the information, then you know this is far from over. This is far from a done deal. This is far from a certainty that AMC plummets after April 27th. Quite the opposite. When everyone is this bearish, you don't want to be bearish. Usually you don't want to be bearish as well. Now, let's move into what happened with the CPI report today, and then we'll get into the economic data coming out at 2 p.m. today, which is the FOMC minutes. So the markets, it's a mixed bag here. Markets were up quite a bit at one point. You're starting to fall now. The S&P 500, look, it gapped up over 0.5% and then continued to run after the CPI report came out. Sold it off. Got a decent little bounce here over the last 2 hours or so. Now you're starting to come back down. You're hardly up on the day, up 0.07% at the time of recording this video. And really, if Apple gives it up, the markets are going to give it up from here. And Apple's been pretty weak as of recently. Now, inflation. Some people think it's good. Some people think it's bad. I think it's hard to make the argument that this is good. It says inflation rises just 0.1% in March and 5% from a year ago. Those are the headline numbers. This is including food and energy, which is like 45% of this whole report. Excluding food and energy, this is what the Fed talks about. There's only nothing they can do. I was going to say there's only so much the Fed can do. There's literally nothing the Fed can do about food and energy. That's it. Nothing. Besides pushing us into recession and making those commodity prices fall. That's all the Fed can do. And they're seemingly doing a pretty good job at that. Now, excluding food and energy, core CPI accelerated to 0.4% and 5.6%, both as expected. Now, I think this is why you're not getting a more, bearish outlook from the CPI report, is because they came in as expected. Now, as expected is still, on an annualized basis, 4.8%. If you extrapolate 0.4% times 12, that's almost 5% on a full year basis. That is bad, and that's excluding the food and energy. That's like your services, right? Your doctors, things like that are more so connected to how you and me would feel inflation. All these reports suck. That they don't capture inflation in the real world, but core does a little bit better of a job in actually capturing a lot of those services, right? So you're reaccelerating. This is not good. But what is interesting, and let's pull it up, is this chart right here. So this dark blue line is headline CPI. This light blue line is core CPI. Well, this is the first time that core has been higher than headline CPI since January of 2021, when CPI was 1.4% and core was around 1.4%. This was the last time this happened, right? And energy and really mostly energy really pushed CPI down to almost deflationary levels during COVID, and it took a while to build back up. Core was the one that was substantially higher during all of this. Well, those got disconnected, and now you're seeing core going higher than headline CPI again. That is a very negative thing. That is showing inflation is sticky. It's going to be around for a while. The Fed's going to have to raise rates more. They're going to have to be more aggressive, keep their foot on the neck of inflation for longer. That is not good for equity valuations. There is no way that is good for equity valuations, no matter which way you want to spin it. That's negative. That's very negative. And I think the markets are going to realize that very shortly. And I think that's probably why markets are now in the red, is because even though that headline number came down quite a bit and was a lot better than expectations, that core number is terrible, is terrible. Terrible. Like, so bad. So bad. So I would be a little bit careful here. You got to play a little defensive. You got to get ready for earnings season and the rest of the catalyst. But I don't think this sets a good precedent for those other catalysts. And what I mean by that is, now that we got bad CPI out the way, if you start to get more bad data, that's just going to compound these factors and could lead to an even bigger sell-off, in my personal opinion. Now, let's talk about the data coming out later on today as well. So you are going to get the FOMC minutes. Now, the FOMC minutes is a transcript of the last Fed meeting. And I think what people are going to care about most is what the Fed was thinking in regards to the banking crisis, because that was the top of mind during the last Fed meeting, was the banking crisis. And some people were hoping for a pause. Some people were hoping for a cut. And obviously, we know what prevailed. We got a 25 basis point rate hike. But this was by far, in the Fed's words, the closest Fed meeting that they have seen in a while, as far as, you know, actually pausing or not. This had the most debate whether to pause or not, and that obviously did not happen. But we want to hear what the Fed was talking about and discussing at that last Fed meeting. So we might get new details on this, but it is lagged data, even more so than CPI, because a lot can change, obviously, in a month. The last Fed meeting was almost a month ago. So, you know, take it for what it is. I believe it was actually like 2 weeks ago, but still, you guys get the point. Now, tomorrow, you're going to get some more important economic data. That is going to be PPI month over month for March. That's the producer side of inflation. It stands for Producer Price Index. You're expecting a 0.1% increase. Last month was negative 0.1%, so you're expecting inflation to go higher right there. Initial jobless claims also are expected to come in at 234,000. I don't think you get a reaction at all based off of that right now, considering this week is so jam-packed with other things, unless it were to come in at like 300,000 or 350,000 or something that was a real outlier there, that would give you a move. Now, on Friday as well, do not count Friday out. Friday is going to be a massive day. Coming out at 8:30 in the morning, you are going to get retail sales month over month for March. You're expecting a drop of 0.9%, a negative 0.9% rating. Last month's rating was negative 0.4%. Retail sales going down obviously helps push you into a recession. It shows you that consumers are slowing down. You're also going to get Fed Waller that speaks at 8:45 a.m. on Friday, and then the Michigan Consumer Sentiment Survey coming out at 10 o'clock in the morning. You really want to see the overall consumer confidence, because that can be a leading indicator to a recession. The survey is like 65 years old now, and it tends to be pretty reliable as far as inflation expectations and forecasting recessions based off of consumer sentiments. And then, like I said, the 5-year inflation expectations will also be very important. But on Friday as well, you're going to get bank earnings. You're going to get some of the top dogs that report. JP Morgan, United Health Group, Citi, Wells Fargo, PNC, and BlackRock will all be reporting earnings Friday before the bell. So that will be huge, and you want to pay attention to the bank earnings, and I don't even think I need to elaborate on why they will be important. Just know they will be important given the banking crisis situation that has been unfolding. Now let's switch gears and talk about AMC here, because AMC is up 4.5% on the day. This has been the case as of recently. When the markets start to sell off, AMC starts to rally, and you hit a high of $5.72 just here about 15 minutes ago. Stock is at $5.66 per share. Keep in mind, we talked about this. AMC broke and closed above that 50 and the 100-day moving average yesterday, and especially after today is creating some more distance from that level. So it looks like you are primed for a continued rally to the upside. Now, if we draw this other trend line out a little bit further, some resistance could come about $6 80 cents per share if I were to imagine. Now, the higher AMC goes into April 27th, the less chance I think you see a big rally, just because, you know, the probabilities would be moving around, and the higher AMC goes, the less likely it is to get bearishness coming April 27th. At least in my personal opinion. And likely you're probably going to see a lot more bullishness heading into April 27th as investors do start to hedge out those positions, those shorts that are massively short on AMC that are realizing slowly, right? They don't tend to move pretty fast. They're not always the brightest individuals. They realize that they're massively short on a stock that is basically subject to whatever the judge wants to do. And that's not a situation you usually want to be in. So that, I think, will help keep bullish pressure on AMC. Now, let's give you a rundown of the Ortex data, and then we will go ahead and wrap up this video because we got a lot of other stuff to discuss throughout the day today. So the live short interest of free float is sitting at 25.06%, 130 million shares that are currently sold short. You got a cost to borrow average of about 784%, cost to borrow max at 806%, cost to borrow minimum sitting in between 300% and 8%, just depending on what time of the day it is. Now, this, I think, is the biggest story of the day. Interactive Brokers is reporting their cost to borrow rates at about 763% consistently throughout the beginning of trading today. Earlier, just about 2 hours ago, cost to borrow rates were 979% on AMC stock. These are numbers that you would run from as an individual investor. If you tried to take on a short position that had a 763% cost to borrow rate, or anything like anywhere close to that, you would run. And if you did not, if you took on that short position, you would realize that those borrow fees are really, really hurting. You would want to be the one lending out stock at these rates to get 760%. Where can I lend out my stock at 700%? Not a terrible idea if you guys are able to do that. You're catching my drift, hopefully. That if it's like a no-brainer, you should lend out stock because the rates are so high, you definitely shouldn't be shorting that said stock if you are a hedge fund, especially, again, when this court date, April 27th, is likely to be very bullish for the actual price of AMC. Shorts are at risk here of taking on these short positions at 6, 7, 8, 900% cost to borrow rates, losing on the equity, because if they're short and AMC goes higher, they lose right there. They're losing on the cost to borrow rates. They got to put on some upside hedges. Their collateral, likely at the same time, markets are falling right now. Literally this second that we're talking, markets are hitting a new low on the day. Well, you're losing on your collateral, you're losing on the cost to borrow rates, you're losing on your equity with AMC because AMC continues to go higher, is breaking out of key levels. Well, none of that is good. And I think that sets us up for a massive short squeeze. Now, if we take a look at April 28th, you can see, I talked about this in the last video, that I do think as this total open interest number on the call side does continue to go higher from where it was at a low at 9.77%, currently at 13%. I think the higher this number goes, the more bullish AMC gets, because obviously that would be hedge funds purchasing calls, potentially purchasing shares to hedge out some of those short positions they have. Or just if, hedge funds were, long on AMC, or long on APE, I should say, and they start to get doubtful that the judge might not, let this go through, that this trade could fall apart, it would make a little bit of sense to go out and buy AMC as well, because even if APE were to plummet at that point, AMC is going to go higher, right? So that's a way to also hedge out your positioning, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys also want to come trade with me live in real time, link down below in the description of this video as well. Most importantly, enjoy the rest of your day, and I will see you in the next one.